Sports card prices going down? What is Dustin talking about? This doesn't make any sense. How can this be a good thing? Well, we will dissect this because it can be. Stick around. Hello to all my sports card collectors, investors, all of my collectibles friends. We are back again for another video. We've got a topic, semi-controversial, I guess, but it really shouldn't be, and I'll kind of walk us through this thing. I'm eager to hear your comments below. If you're new here, please hit that subscribe button. We come out with almost daily sports card collectibles, tie in some finance stuff, some big picture stuff. It's all a good time, so definitely hit the likes, the subscribes, the notifications, all the buttons down below to help us spider out the video to the masses. Also connect with me on IG at SportsCardDad. I'm also on the old Twitter machine, the SportsCardDad. Okay, guys, we have seen a retraction in pricing, a retracement. Rudy from Alpha Investments always talks about retracement, something like that. Anyway, the point is a pullback in prices. We have seen that really happening over the last 12 months, and we're starting to see it kind of continue on. And it's not even just on lower and mid-level type sports cards price-wise, but also on some of the higher end stuff as well. And this was, the attitude, even going back a couple of years ago, it would always make me wince when I saw it in the comment section of my videos, is this card can never go down. This card, Michael Jordan, Tom Brady, these all-time greats, these cards can never go down. They only go up. Anytime I ever hear anyone to say that anything can only go up, it makes my head hurt, because while I do understand that you can have extremely scarce, very rare card, most popular player on the planet, I get it. Prices can shoot up to a certain point to where they have kind of overshot. It can happen. And we've seen it happen over the last couple of years with a variety of different types of cards, different types of players, etc. It's no different in sports cards than what you see in the equities market with stocks. It's no different than cryptocurrency. Look at crypto now. I checked my Coinbase account today and it's not looking pretty, but we're going to talk about why I'm okay with that. The reason why I'm okay with that is a thing called dollar cost averaging. And it's when you are set on something, when you've got a particular set of collectibles or, cryptocurrencies or stocks or whatever it is. If you're buying individual stuff, a lot of times, hopefully, what we've done is we've done a lot of research going into these things, and we are a believer in a certain player, a certain crypto, a certain company, whatever it happens to be, real estate market, blah, blah, blah. And so we are looking at it from a long-term perspective. Yes, the short-term flips and the trading, that can be kind of fun and exciting, but in reality, we can't really do all of it that way. There's got to be some long-term horizon type stuff that we're looking at. And for me personally, especially on the collectible side, I have really tried to focus in on stuff that I believe has potential long-term. And let's face it, whether we're talking about stocks, equities, whether we're talking about crypto, real estate, or collectibles like sports cards, do we really feel like where prices got to that we were getting amazing bargains on these things? How much upside is it, when you've got, a random Michael Jordan card that 3 years ago was $2,000 and now it's $50,000. The same could be said for, a Bitcoin where a few years ago it's $3,000. It gets up to $69,000. Now, granted, could a Bitcoin be worth $1 million one day? Maybe, and maybe it will. But the point is we're always kind of looking at value, and it's been tough. It's been tough recently because a lot of markets, frankly, have been completely overheated. So much money pumped in the economy. It's got to go somewhere. It's gone into collectibles. It's gone into all sorts of different markets. And so seeing prices come back down, it gives the ability to get back into things or to add. Maybe you bought something. I have certain cards. I've got cards that I bought for $300 that really, if I went to go sell them today, I might get $150, $200 for it. Some maybe $100. The idea, though, is that I still like where that is. I still like the card. I still like the player. So as prices start to move downward, I'm able to dollar cost average and buy multiples of those things if I feel like there's some value long term. We're looking at a long-term horizon. Instant gratification is such a huge thing in today's society. We see it on social media where you're scrolling. You're always looking for that next big thing, IG story, blah, blah, blah. You're looking for the next thing to entertain you. You're looking for the next to the moon 10x thing. And we just forget the realities of investing is really about long-term horizons. It's having a belief in a certain market and going with that over time and understanding that there's going to be ebbs and flows and ups and downs to all this stuff. And look, prices coming down on all this stuff. Yes, I'm watching a lot of my portfolio shrinking, coming down, but the attitude to take here is buying opportunity. For me personally and for my family, on the horizon, we may have a recession. We may not have a recession. We've talked about it on the channel. Regardless, the big focus for us is, do we have a solid emergency account? And can we just hang on and hopefully there's no job loss. It's the job loss piece that can really kind of throw a wrinkle in this stuff, because it's like, okay, I got to go find another job. How long can that take? That can be kind of an issue. So as long as we can hang on to our jobs, keep making the same money, and be able to buy in on assets that are dropping in price, we're able to dollar cost average and also get into new things that maybe they were just too overheated and we wouldn't have even considered. So this is a big time opportunity. It can be. We'll see what happens over the next couple of years, but we've talked about this before on the channel. Warren Buffett, the all-time investor, he's so great and this and that or whatever. Warren Buffett has made a lot of his fortune on a few huge moves. We've talked about it. Coca-Cola back on Black Monday, back in the late 80s. Coca-Cola, I think Black Monday was like September, October timeframe, 87-ish. I'm kind of guessing here. Warren Buffett went in and made a huge move and bought $1 billion of Coca-Cola stock in 1988, January, February, where it was like $3 or something a share. Of course, it's gone up quite a bit since then. He's done well. He also did the same thing with Bank of America. After the 2008-2009 financial crash, Bank of America stock went way, way down. What happened then? The wealthy got wealthier. Warren Buffett went in hard. He goes in on companies he believes in. It's really no different. The huge buying opportunity, and he did very well. The main point I'm driving at is not necessarily these companies or one stock or one collectible or this, that, or whatever. The main point I'm getting at is that these recessions, these low times when asset prices are way down, is when people make a lot of money because they get in and they buy low. They buy it low. A lot of times what happens is the reason why the prices are low is because of fear. Everyone's selling out, sell. And the people that dive in there and get quality assets at lower prices, when it comes back up and cycles back up, they're in great shape. So guys, it doesn't always have to be bad news when prices move down. It doesn't mean the world is ending. Doesn't necessarily mean bad news at all. It can be a great opportunity. So let's kind of focus on that as well. Thanks for joining me here today. Stay healthy, stay awesome. I will talk to you again later.